Switzerland has always been a safe haven, and Switzerland will always be a safe haven with its Swiss franc, good economy, and I think this won't change, and this will also be the case for digital assets.
So I think while traditional banks still think, crypto is not strategically important to us, it could actually solve these challenges for them.
In 5 years, who will own more Bitcoin, governments or banks?
Michael Saylor.
This is the Assetizer Podcast.
All right, welcome everyone. I'm Leon. I'm an editor at the Crypto Valley Journal. I'll be moderating this panel with a few of our experts. One quick organizational note, because of the weather, I think all of you can already assume that the barbecue is unfortunately canceled. We'll be staying here in this room. People who want some fresh air, want to smoke, can still go upstairs. It's the 3rd floor. We'll have plenty of snacks though, drinks, etc. Before we get started with the panel, I'd like to know a bit about our audience. So could please all of you who work for a financial institution raise your hand? Oh, wow. That's a lot. Okay. And anyone working directly with digital assets already? Okay, beautiful. Okay, so let's get started with a quick round of introductions and then get into the first question.
Very good. So hello everyone, my name is Pascal and I work for Inco Bank. Inco Bank is a B2B service provider and we have been offering digital assets to banks in Switzerland since June 2020. Myself, I've been involved in the financial industry since 2002 and have been working with digital assets since 2016.
Good evening, everyone. My name is Robin. I am the head of institutional sales and partners business from Swissquote Bank. I am with the bank since 3.5 years, more than 20 years in the financial industry, and I joined the crypto community in 2017 with a company called Crypto Finance that was in the meantime sold to Deutsche Börse. And since 3.5 years, I'm responsible for Insti Sales, as mentioned, where crypto business obviously is a part as well. It's not the majority, not the relevant part, but it's an important part where we offer, a very broad service. Swissquote is live since 2017 in crypto trading, was the first online bank in Switzerland offering. And very happy to have you all here and to be here as well. Thanks very much for the invitation.
Hi all, my name is Andrew. I work for ZKB. ZKB is the 2nd largest Swiss universal bank. And since September 2024, we also offer crypto services. My role at ZKB is to drive strategic digital asset capabilities. My main responsibility is our crypto custody solution.
Hello everyone, I'm Andy Fleury, I'm the founder and CEO at Widen. As you can tell, I'm the only non-banker here on stage. We're a software provider. We help banks in Switzerland, across Europe and overseas in implementing their crypto and digital asset strategies. We provide them all the technical infrastructure for trading, custody integration, core banking integration, settlement, treasury, whatever you want.
Hi everyone, my name is Mark. I am the MD of Gen2 Digital. Welcome to our offices, by the way. And Gen2 is the largest and the best securitization platform on the planet.
Great introduction. Okay, so to set the stage, first thing we're going to talk about is kind of the regional role of Switzerland. We have the US really pushing ahead with their own strategic Bitcoin reserve, with new legislation for stablecoins, so digital assets for fiat currencies. And many major financial institutions such as BlackRock and Fidelity really leading the charge. On the other hand, the EU is slightly more restrictive, and Switzerland has kind of taken a neutral approach, as always, and is now, according to some critics, slowly but surely losing steam. So my first question to you, Pascal, would be what the role of Switzerland in this international competitive market can realistically be, and what financial institutions should be thinking about right now.
Well, first of all, it's very impressive to see what the volumes driven by these ETFs in the US. So the IBIT was the most successful ETF ever being created since existence. And within 7 weeks, there were more than 10 billion assets under management there, which is from a European perspective, obviously very impressive. But we also had quite a few very successful stories here in Switzerland or here in Europe. 21 shares, and I just looked it up this morning. They are roughly also managing around 10 billion, which is very high. And also CoinShares, which has been created in Jersey and then in the UK, is also roughly managing 10 billion. So it's not that they are very much ahead. It's still, Europe is very good counterbalance there. So Switzerland has always been a safe haven, and Switzerland will always be a safe haven with its very good educational system, with its Swiss franc, strong Swiss franc, good economy. And I think this won't change, and this will also be the case for digital assets. Clearly, and secondly as well, with the DLT Act being brought into place in 2021, was one of the first jurisdictions having clear clarity in how to have a custody solution, or how our assets in so there was no ambiguity around asset classification there. And thirdly, and pretty much very proud of this, there is around 20 plus banks in Switzerland that offer crypto asset services. So there is no other country which has the same rate when you look at people living here. And it's great that you can come here, you have the stability, but you also have the very secure and digital infrastructure for digital assets. It's to the role of Switzerland, and in terms of what do companies, or what should companies do, is obviously their regulatory readiness. So you need to have a legal framework if you want to offer digital assets, and also have a good understanding which markets you want to cover. To give you an example, MiCA license in Europe as a Swiss regulated bank, you can't have European customers, or you can't directly target European customers, and that's certainly something that you need to have on your roadmap. Secondly is tech. So which infrastructure do you use? Do you build it yourself? Do you buy it? Nowadays, people or companies just rely on already existing banks offering the service. Thirdly, that's the product innovation. And what we've seen recently is banks just offering the bare minimum of services, and that's just custody and brokerage, potentially also staking. But you need to think a little bit beyond that. So it's not only these services, but it's also, what about derivatives? What about lending? What about yield optimization? That's where the future is going to be. And fourthly, the client education bit. So take your clients onto this journey, educate clients, and also ensure that you have research and that you can advise customers on digital assets, because this is when eventually volume will come, and not just execution only.
So, same question.
Do you have anything to add?
So I think it was a quite good,
Okay.
like full answer. I do agree. I mean, maybe two things only to add. Obviously, you know, Switzerland is known as a financial hub in the world, right? I mean, we might have there is others being peers or competitors, you know, in Asia being Singapore, but we are still very strong. So it's obvious that it, for me, still makes sense to have those products in place as well, because global markets are used to safe keep assets, at least in Switzerland. And I do also think that those, you know, all the different, you know, token solutions, currencies, and so on, in the long run, they might row up with other asset classes already existing, right? You might have the, you know, equity tokens, which is kind of equity. You have the cryptos, which is like FX business. So it's kind of getting into these segments again. And second thing is that we have a very strong tech place as well. We have the ETH, we have the EPFL, so we have a lot of very you know, educated brains in the technology sector, where we I guess still would have a place also to further develop.
Maybe just to add one thing when we talk about Switzerland as a financial hub. Switzerland is very strong when we talk about wealth management, and it has always been. And if we talk about wealth management 10 years, 20 years down the road, there's going to be some sort of crypto asset involvement in there. And I think if Switzerland wants to still be a global wealth management hub in the future, we have to at least adopt certain parts, also the large traditional institutions within Switzerland.
Maybe let's get into one thing specifically that has been quite a hot topic lately, which is stablecoins. The US just last week introduced a bill for stablecoins. And my question right away would be, where's Switzerland? Where are the Swiss stablecoins?
Nowhere.
I mean, I can talk about this being the only non-Swiss person here. So, look, I think I'm a former FX trader and economist, right? So from my perspective, the Swiss don't need a stablecoin. Your banking system here works really well. Your payment system works really well. And your currency has been only going one way for the last 15 years. That way, right? So you are kind of a reserve currency, in fact. But when it comes to stablecoins outside of Switzerland, they'll proliferate because they need access to the proxy of the US dollar, which is USDT, and potentially USDC as well. And if you're coming back to the regulation side of things, I mean, I'm Canadian, so everyone in the local markets tends to hate on their own regulation, right? Everyone in Canada hates regulation in Canada. Everyone in the US hates Trump. Everyone in Europe tends to think about what's happening on this side as well. And so I think Switzerland is really moving very quickly. There's between 20 and 40 banks here that can actually accept crypto. That's a really big deal. So I think we got to move away from the stablecoin topic and talk about different asset classes as well, right? We have to move up the risk curve. We went from stablecoins, which is great. Then we're going to money market funds. Now we're going to private credit. Private credit is now $14 billion on chain, which is remarkable. Yes, very, very small, but still growing. So we'll start going up the risk curve now, and that's a really wonderful thing to see.
So I guess, according to you, we don't need stablecoins, but maybe something probably all of you on the panel could agree with is we need banks with digital asset offerings. And the reasons for banks to offer digital assets, I think we can discuss shortly, but what I would be interested in from the customer side, so from a client trying to invest into digital assets, why should they pick a bank or a regulated financial institution instead of going to a crypto exchange or just buying an ETF, ETP?
I can give an answer to that. It's very simple, counterparty risk, right? We've all been involved in FTX in one way or another. We heard of the Bybit hack. And what banks have been good at and have done for decades is safekeep client assets. This is what banks do, right? At big exchanges, everything is commingled. The exchange itself, the brokerage business, the lending business, funding, it's all one company. At banks, these are separate entities, separate departments with Chinese walls in between. That provides the security that customers need. This is the number one reason. Now, of course, there are the crypto natives that have left the banking system, and they're probably not coming back. It's going to be very hard in getting them back. But there is now a much bigger population of also older people that are looking to invest into crypto and digital assets. And they're completely new to this. They need guidance, and that's the role banks should be playing in the digital asset age.
Yeah, maybe also to add on that, clients want simplicity, especially if you want to put 2 or 5% allocation of your portfolio into crypto assets. You do not want to switch to a separate app. If you do that, you have 20 apps to manage your personal wealth, right? That's what we see from our clients. And I think the second thing, and it's going to be interesting to develop, is also once banks start to offer advisory or also multi-asset portfolios with crypto allocations, that's something that we don't really see crypto exchanges doing right now. And I think that's going to be a USP because then trust really sets in. And I think that's what's going to be one of the key factors in the future.
Just one last thing, or second last thing to add at least. Since I'm in the institutional business, you do also have not, we have core affluent private clients, but you also have institutional clients. They are forced to use a bank. Think about, having funds issued. We also do safe custody for funds or for actively managed certificates, where you rather want to have a bank in order to safekeep, maybe also in order to get the liquidity, in order to decrease the counterparty risk that might be involved.
Now, Mark?
I do tend to talk a lot. So the thing, I think capital tends to be fairly inefficient when it moves around, right? So banks having, to your point, Andre, having a one-stop shop where you can get to access these kinds of innovative investments is a really big deal in this market. And so, yes, the banks have been around for generations. They've gone through 60, 70, 80 years of securities law. And that's a really big deal. When people talk about, oh, I've lost my coins in a self-custody wallet, like, oh, who can I chat, who can I speak to? When they go to a bank, they know they can talk to someone about this. So the on-ramp, at least from a knowledge base, from a banking perspective, is better. It's easier, right? I've been in crypto since 2016, and so I went through the whole phase of liberty and love for all. I'm just going to go off-chain and do everything off-chain. Still got to live, still got to eat, still got to pay bills, right? So banks facilitate the on-ramping, and that is changing dramatically right now, especially with what's happening in the US. Regulation is changing, fast and furious. And same in Asia. We got hubs opening up everywhere. And so people want to get access to, the ETFs were probably the best thing to happen to this asset class in a long, long time. And I know I'll keep talking about securitization because it actually eases the on-ramp for people who want to get into this asset class. If you ease the on-ramp, you get there quicker. You start dealing more with yield. It democratizes the way you get yield as well. So we kind of need the banks to be in this equation.
Side, we have a lot of financial institutions, bankers in the audience. Let's start with you, Pascal. What are the main advantages of offering your own services as a bank instead of just referring customers to using an ETF or using a different brokerage?
Well, what we have heard on various occasions, I think ZKB started with that information is you have outflows. So you have customers wanting to invest in digital assets, and if you as a bank, if you don't use it or if you don't offer it, so you have outflows and people are leaving your bank. And I think this is certainly one of the major advantages that you have. But also now with very low interest rates, you need other opportunities and potentially also other revenue streams. And we see banks having or offering digital assets that make an additional revenue stream or an additional revenue pillar. So they're not always very dependent on just interest rates. And I'd say it's also an innovation play. So we have banks, interestingly, they just want to be part of it, just for the sake of putting information out there that Bank X is now also offering crypto assets, just that they are on the radar again. And I think these are certainly major points to look into.
Maybe a little story. Swissquote is founded by two engineers, Mark Bürki and Paolo Buzzi. And actually in 2017 or 16, Paolo Buzzi came to the office and he put a Bitcoin stick on his screen. So Swissquote really came to that invention being so early stage in crypto space was not because of, maybe also due to revenue expectations, but it was mainly because the technology was so interesting and they thought this is going to be the next big trend, right? And obviously today, if you look at the offering, it is also a revenue driver. So it's a demand from the clients. Being a bank, enabling the market, getting access to the market, clients, retail, core affluent, institutionals. We need to have crypto in place. But also, we had years where 20% of the revenues were out of the Bitcoin or the crypto business. Now it's below 10% again. But it's also a revenue driver. And on the other hand, you also have an activation of a market segment being active in trading, and they start with cryptos. So there's a lot of generation Ys. It's more than 40% of them. They are interested or they do already trade, or it's more than 50%, according to the Lucerne University study. They are interested to trade in cryptos. They want to have access. And sometimes they don't even have bought the share yet. So it's also a tool where you can actually onboard clients and then make them diversify into other asset classes as well.
If I can, sorry, I'll just have to build on that because in my opinion, crypto actually solves two problems of traditional banks. The first one is how do they get young customers and how do they get them to stay? And the second one is how do they actually onboard people who have never invested before into the investment ecosystem? And what we see at ZKB is 40% of our clients have never invested before. And the second one is the average age is way below what we see for traditional investments. So I think while traditional banks still think, crypto might not it's not strategically important to us, it could actually solve these challenges for them.
One thing to add, the original question was why don't banks outsource to service providers? And these are all very valid reasons. The revenue case is all there. But I think one key reason is, this new technology, blockchain, is here to stay. I've been saying this for many years, but at some point, every type of asset will be tokenized. Bankable assets, non-bankable assets. So banks need to get familiar with this technology. So by just outsourcing everything, you're giving up on that opportunity to build up the internal know-how that you're going to need at some point anyway.
So let's say someone in the audience has been fully convinced they work at a bank, they now want to offer some sort of digital asset services. What are some of the most common challenges and what's kind of the roadmap? How long is this usually going to take for a bank?
Maybe I'll answer that one because we've been helping a lot of banks doing exactly this. So challenges are that, this is still a new space. And the bank is not going to build everything in-house. You need vendor solutions. You need something for custody, KYC, something for trading. So often banks are struggling with integrating and working with all these vendors. And that's something I see as basically a demand for us, the tech industry. We need to better work together. We need to provide an end-to-end service to the bank so that it's as little effort as possible. In terms of duration, I mean, it kind of depends on the internal speed. And what we have seen, probably the shortest project we've ever done was 2 months. The longest is well over a year until go live.
Similar experience at ZKB?
Not 2 months, more like 2 years. I would actually say if you actually want to build it in-house and do it yourself, it's going to take you 18 to 24 months, not from scratch, but with partners. And what we also see from smaller banks is that they outsource it completely to another bank like ZKB. And there I would say 6 to 12 months is realistically, because you have all the negotiation, you have all the education, you have a FINMA application that you need to submit as well. So I would say it depends on what model you choose. And that's the implementation project. Probably you started years before that with like putting in the seeds that the bank actually might want to do it someday.
Yep. Mark?
This is a question I get a lot. It's always it can be boiled down to maybe 3 or 4 different things, right? One is compliance, there's complexity, there is custody. Those are the 3 most important aspects of, really building your own tech stack internally at a bank. The compliance side, okay, how do you shoehorn new and evolving regulation into an existing regulatory framework that's existed for the last 60, 70 years? That gets difficult, right? Then there's the complexity of it all. Because right now you have cash, you have fixed income, you have FX, you have commodities, all on different ledgers. And now with digital assets, you have it all on one ledger. So trying to integrate that or create the know-how and the knowledge base around that is very difficult. And you got custody as well. Custody is a race to the bottom at the moment because that's being forced by regulation. It's going to become cheaper and it's going to become hopefully be better as well. But that's something that you have to think about is how do you store your assets when you're looking at how you store equity, fixed income bonds, for example, right? And lastly, I think it's credit as well. Credit is the hard one here because when we talk about stablecoins, it's a fully funded asset, right? So in economics, we have this term called narrow banking. Narrow banking existed 300-400 years ago. And it started off because of a very simple concept. We don't want risk, right? Everything was backed by cash and cash equivalents, government bonds, physical assets, right? Now the credit formations function within banks is going to change dramatically there. Because if you want to do a loan on Aave or in DeFi, for example, it's very easy to do because they know exactly where your assets are in your wallet. You can prove. If you're doing it in banking, it's very difficult I mean, getting a mortgage still is quite difficult to do. The paperwork involved is immense, right? So I think these are the real complexities that you just solve pretty quickly.
Okay, I know everyone's here for the free drinks, so I'll try to stay on time. We have about 10 minutes for Q&A, so I'll look around the audience and see if there are any questions. If so, please state your own name, state who the question is for, and then ask right away. No reason to be shy. Yes?
Well, I'm Jacob here from 21X. And the question to the audience here is kind of to the panelists is, what is now this next wave of things we see? We talk stable coins, we talk credit. What is it, So what we see, what do the banks adopt, What is it? Tokenization. What are we going to see this next wave beyond crypto? Is it just more crypto? Is it bigger coin universe? What is it, Going to move into DeFi? Any boring? I don't know. I would like to say, let's say 2 years down the road, what you see. So what are the trends here you're going to adopt?
In Switzerland, institutional adoption and integration into existing portfolios.
So what we see is, so we are obviously constantly, increasing our offering on the coin side, and we have our own exchange, Swissquote Exchange, where we provide liquidity, but we only do it for currencies, for currency coins today. So what we do think that is on the tokenization, there were a lot of projects already years back, but they were probably not as fundamental and not at the right time. Today we see more fundamental projects where we do think that we want to be able on the institutional side to provide the services needed, i.e. custody. If you want to have a tokenized money market solutions, you need to have a bank mainly in order to have the safekeeping of the underlying assets, but also providing liquidity for those tokens via our exchange and safekeeping via our custodian solutions. I think that's one of the things that is coming. And on the service side, I mean, there is, we have trading, we have custody, we provide LTVs already, we provide transfer in, transfer out for not all of the coins. So one target was to have it available for all of the coins. We are almost there today. And then you have staking, which we offer as well. But there is more services that you might wanna offer where you see a demand in the market as well. And that's where we're working on as well, obviously.
Maybe just briefly, it's, pretty much all the offerings within banks are execution only. So if I have an account with ZKB, I need to call ZKB. I pretty much need to convince my client relationship manager there, buy Bitcoin for me, and then it maybe works. So what we need to understand is the big volume is still hidden, 95% plus. It's still with the big asset managers, with the big pension funds, and they are very, very far away to invest in digital assets. So the question here is, how do we get to these pots of money? Because everyone wants to come to Switzerland because of the huge pile of money that is lying here, but no one is investing pretty much. It's only retail. So, and I think this is moving towards a more giving advice-based setup, which we already know from traditional private banking. And that's the clue, and this is going to be the solution to more trading, more liquidity.
Mark?
Here. I think you'll see a lot more consolidation. There'll be blurred lines across the stage, right? So you'll see banks acquiring crypto firms acquiring banks. That's going to happen in spades, I think, because, look, Robinhood just bought Bitstamp, and overnight Bitstamp got 24 million new customers. And what do they want? They want more yield. That's all they kind of want, right? So if there's going to be a tangential asset class, yield products will have to start coming into play. So I said we're going up the risk curve. This is going to happen, and it's going to cause consolidation across both banking, TradFi, and DeFi.
Okay, we have time for maybe one or two more questions, if there are any. Yep.
One for me. Yeah, I mean, I don't know much about Swiss law, I'll give you that, but I think the treasuries at companies are changing now, right? Everyone's buying Bitcoin for some strange reason. And it's inflating their companies dramatically. So treasury departments in banks, or not banks, sorry, in companies from, from obviously strategy to every other company on the planet is now being overvalued because of this stuff. So I think there will be a movement to this, but the ETF landscape, ETP landscape is making that a lot easier. So you don't need a wallet to do this kind of stuff, right? So the biggest winner here is going to be Coinbases of the world because they'll take care of all the custody.
There was one more question here.
Thanks, Blaž from Blockchain Innovation Group. With the rise of private markets in the last years and under allocation of also institutional clients, how do you see the merge of, let's say, tokenization, blockchain, crypto solutions, and private markets?
Sure. Private markets is an interesting one, right? So the last few years, private credit has exploded because credit was cheap, right? And you got private markets are better at assessing credit than public markets are, especially when it comes to the banks. But when you start to see rates go up, banks become a little bit more reserved, right? So they hold back, and they go, okay. So private markets are better at assessing credit risk, in my opinion. And this has been for the last 50 years. It's always going to be the case. So when things start moving up the risk curve, I think tokenized credit funds are going to come into play, and this is what we're seeing right now. Look at what Invesco did, $6.5 billion just on chain. And same with Janus Henderson, right? 1.1 billion, I think, on Centrifuge. So these things are happening right now. People want yield, especially when you have a very high rate environment right now.
I think a lot of these investment vehicles are going to profit from the fact that tokenized securities now finally become tradable, right? We have done tokenization for many years, but only now the first few licenses have been given out to guys like you. And that's really what is needed for these vehicles to take off on a blockchain basis.
Okay, we're perfectly on time. To round things up, I have a very, very brief round of rapid fire questions. These are just quick questions. I would like our panelists to answer them with 1 to absolute maximum of 3 words. We'll start with Pascal. Just give the mic around. So let's start with you. Bitcoin or gold?
Bitcoin.
1 word to describe Swiss financial regulation.
Swiss financial in general. Okay, I mean, in terms of cryptos, I'd say lean and
1 word. Most overhyped buzzword in the space.
Shitcoins.
The minimum digital asset exposure everyone should have.
5%.
Biggest threat to crypto adoption.
Hacks.
Can you give the mic back to Pascal? Best banking jurisdiction in the world.
Well, obviously Switzerland.
In 10 years, digital assets will be?
on a much higher level than today.
Yeah, that's fine. To follow up on that, $1 million per Bitcoin, is it happening, yes or no?
No financial advice, but yes.
What's superior, decentralized or traditional finance? What's superior, traditional or decentralized finance?
Traditional.
Oh, interesting. In 5 years, who will own more Bitcoin, governments or banks?
Michael Saylor.
Mike back. Last round, coffee or tea?
Coffee.
See some very skeptical faces in the audience. One word to describe your coworkers.
Fantastic.
One app you can't live without.
MetaMask.
The biggest Swiss stereotype that's actually true. Indecisiveness. Indecisiveness. And last one, Mark, they're going to hate you no matter what you say. Pineapple on pizza, yes or no?
Absolutely not.
All right. Thank you so much for listening. Thank you to our panelists. Please, another big round of applause. we'll start with the fun part.
This is the Assetizer Podcast.